Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Natural gas, when we talked a couple of weeks ago, we said it was due to make some moves. What's happening there right now?
Yeah, natural gas, last time we spoke, natural gas had been kind of consolidating and forming an ABC correction, which is nothing more than a three-wave kind of move to the downside that flushes out the longs. It looks bearish to the average investor. They panic. And we talked about how natural gas was down near the 200-day moving average. We're going to be looking for some type of washout low where we just see everybody give up on natural gas and we just see a big down move. And we ended up getting that last week, and we saw natural gas drop about 8.5% in one day. Huge flush out. And it was the perfect opportunity. Subscribers and myself, we ended up getting long for a quick 10% gain in natural gas in the past week off that play. And I do feel as though this is a significant pivot low, but on a short-term basis, we got that washout low. We took advantage of that rebound, that oversold reaction bounce. And now really natural gas is at this point here where it's just going to try and stabilize. It could chop around for a couple of weeks. But overall, the big picture, the weekly, the monthly chart shows this is a prime location for natural gas to put in a low and to start to move higher going forward long term, back up into the $4 and higher level.
Isn't it a little late in winter for natural gas to be going up?
Well, nothing ever really moves with the way it's supposed to. If it did, everybody would be able to take advantage of it. Really the big move we saw last week down in natural gas had to do with more or less the long range forecast showing that we've got extreme warm weathers. Natural gas isn't going to be needed. There's tons of supply out there. And all that kind of came together on the same day, and we saw a massive flush down in natural gas. Seasonality-wise, you'd think it would be winding down. It has been winding down, but it doesn't always work that way. Just because winter's here doesn't usually mean we always see natural gas move higher. It's nothing is ever that simple when it comes to trading and timing the markets. So when you look at the big picture, the prices are down at a key support zone. They've showed all the characteristics that everyone who is scared holding natural gas is now more or less out. And so they've handed those shares or contracts over to people who are comfortable holding it at this price. And so they're not willing to sell. And we should start to see price move higher. And of course, the long-term charts show a significant bottom forming here in natural gas, where we could see it go all the way back up to the $6 mark and potentially all the way back up to the $8. That's not going to happen anytime imminently, but we're looking forward a year from now. I think we could be back at $6 and potentially back up into that 7 or potential 8 mark.
So more of a long-term buy than short-term.
Correct. Yeah. The unfortunate part with commodities and long-term is that it's not that easy to take advantage of. You can't just go buy an ETF on a commodity and hold it long-term, because the way commodity ETFs are formed, they actually have contango, which means they lose value almost like an option over time. So the key with kind of commodity ETF trading, you kind of have to be a little more active. You want to try and time, pivot lows and trim when you see a big, strong rally into resistance and hopefully add again. You kind of have to actively trade it. You can't just go buy UNG ETF or a 3 times leveraged ETF on natural gas expecting it to go up in 5 years, because those ETFs will actually probably lose value even if natural gas goes up, just the way they're designed. So it's a little bit of an art and science to trade commodities going forward for long term.
You really have to keep your eye on them.
You do, yeah.
What about the price of crude? It's been over $50, but kind of hanging in that $50 plus range for a long time.
Yeah, crude oil has been building a really strong potential basing formation here, and the longer it trades sideways and narrows in this kind of pennant formation, this it's called coiling. And what it's doing, it's like a spring. There's a lot of shares, contracts, trading hands as it trades in a narrower sideways channel. It's building up a ton of energy. And when price breaks out of one of these channels or these formations, you usually get huge price expansion. And if we see it break to the upside here, we're going to probably see $60, $62 per barrel hit relatively quickly, probably within like a week or so. We're going to see pretty quick expansion to the upside. If we break to the downside, then we're going to drop really quickly, I think, all the way back down. Right now, it's almost at $54 per barrel. I think we could see a drop, snap down to $47 per barrel, potentially $44 per barrel within 1 or 2 weeks. So there's a lot of energy here. We got multi-month consolidation, all those contracts, people trading in that range. They're ready to either for the market to break up or to the downside. So the more volume that trades in that range, when it goes against half of those people, there's more volume to be covered or closed out of that position, and it creates a huge move. So there's a lot of energy coiling. My gut shows, I have a feeling we're going to see natural gas break to the upside. We're going to see $60 per barrel hit, very quickly. Once it breaks out, it could be within a week or one weekly bar, boom, we could hit that level. So that's kind of where I'm looking at price to go next.
The Saudis have said they'd like to see $60 oil this year. Does that mean at least they'll keep their production freeze in place?
Yeah, potentially. I don't follow what they do too often, but if they want something to happen, you kind of got to wonder how crude oil took such a hit in the first place if they're trying to, squeeze out a lot of competitors because they can get oil out of the ground for pennies on the dollar compared to what it costs in the States. So, they could have been simply squeezing the market out, and now they want to get it back up to a level where they can make some serious coin. And I don't know about their freeze, what they're doing, but I think there's some bigger players at play that can kind of manipulate prices, and they do it for a long enough period of time to be able to get a lot of competition out of the game for them, so they retain power overall.
Have some of these giant stockpiles of oil around the world been depleted a bit?
I'm not sure if they have, but I can tell the warm weather we've had and the amount of driving and motorcycles out in Canada in February is mind-blowing. So there's going to be a lot more demand for gas this summer the way that it's been. Usually here where I am near Toronto, Canada, February is like the deep freeze, meter or two of snow, and you're waiting. You can't wait for spring to start coming. Well, we have zero snow here. The lakes are not frozen. There's sandy beaches. The kids are outside without snow pants. People are on their motorcycles. It's insane. I've never had a February like this before, and there's going to be huge demand, I think, with this warmer weather, with energy, with crude oil being used up, fuel.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with gold?
Sure. Yeah. Well, we've been following gold for a while. We pretty much nailed the low there back in our December, and since then we've been seeing money just continue to kind of trickle into gold and silver in miners. And gold and silver are seen more as a safe haven play more so than mining stocks. Mining stocks are kind of more of the speculative type of play. And it really shows clearly in the recent analysis or the charts recently of where money's been flowing. If we look at gold, silver, even bonds and utilities, they're all considered a safe haven type of play. When people are uncertain of where the markets are going, if they feel like equities in general are getting overpriced, they start to move somewhere that should start to rise as the stock market sells off. So we've been seeing money kind of flow into gold and silver and bonds and utilities for quite a while. But what we have seen over the last 2 weeks are gold mining stocks consolidate. They've actually been selling off and trading lower while physical bullion prices have been going up. And that's usually a bearish sign for gold. And what we saw yesterday in gold miners, where we saw the GDX fall and close about 8% down, huge drop. I talked about it with subscribers yesterday morning in pre-market, saying this market looks primed and ready for a big drop, and it could flush the market out. And lo and behold, yesterday, when I looked at the screen halfway through the day on GDX, I couldn't believe the drop. And, I think this is potentially the start of a pullback. Usually gold miners lead physical bullion, so gold miners have been weak, underperforming. Now they're starting to crash on heavy volume. Today they're selling down again with strong volume, and usually gold and silver bullion prices are going to follow suit. So we've got gold and silver trading at resistance levels. They just look as though they're ready for some type of pullback, and I think we're a couple days away from seeing them start to weaken and consolidate. But overall, I am very bullish on gold, silver, long term. I do feel as though all this is going to be is like a multi-week consolidation. It'll fade back down, maybe test the $1,200 per ounce, currently trading at $1,253. I don't think it's anything significant. I think this is nothing but profit taking, a little bit of a breather for gold and silver before they start the next leg up.
With that, what's a better bet, gold or silver?
Yeah, silver always moves percentage-wise more. So it has more potential upside. The long-term chart of silver to me looks like it looks a little more bullish. There's no point in picking one side or the other. I would always pick a bit of both. I think it's the best way to go. Why put all your eggs in one basket when you can have both metals? We saw, several years ago, we saw gold take off and rally while silver did nothing for several months. It actually did what Crude is doing now. It was consolidating, coiling. Meanwhile, gold and gold miners were taking off through the roof for months. And then suddenly one day silver decided to, break out, and boom, it played catch up, blew past percentage gains that gold had in miners and exploded in value. So they're not always perfectly in sync, but it's always nice to have both because you never know which one's going to outperform more. I think silver has a lot more potential. It's got industrial uses. I just like silver better on a trading standpoint and percentage gain standpoint, but overall, you need them both.
Should you hold just gold certificates or the actual physical product?
I've never held certificates myself. I'd rather own like physical metals, and I do own physical metals, and I trade the ETFs for gold, and I trade gold stocks. But, if there ever was starting to be some type of big financial crisis where there's potential for banks to start to have serious problems, I'd be more inclined to, move more to physical or move out of those type of ETFs. Because some of them, there's a lot of rumors going around. A lot of these bullion ETFs don't actually hold as much as they say, or they're just trading futures. So there's really nothing behind those ETNs, these electronic traded notes. So you got to be careful. I think if the economy becomes extremely shaky and when you start to see like banks potentially imploding, I would be moving out of ETNs and some ETFs and at least trying to stay more in a cash position because you never know what will happen with a fund.
Well, what's the ratio right now of paper gold versus physical gold? And could they meet the demand for physical gold if people handed in their paper?
Yeah, well, I don't know exactly, but I'm pretty darn sure that there's not enough physical gold if people wanted to cash in all of their notes. So that's kind of been a big thing, and you know, in gold and silver more so. You know, eventually there's going to be some type of recalibration where, you know, we're going to see gold and silver have some crazy event, I think, where they could, you know, explode in value because they finally, you know, something resets. But there's a lot of upside potential to gold and silver just because if something bad happens and people start redeeming notes and wanting to get their gold, their physical gold prices are going to shoot through the roof because there is not nearly the supply for what is being sold and out there right now.
Well, of course, we've all seen the documentary where people asked to see their actual gold holdings in New York, and there was a little tunnel between the Federal Reserve and the bank, and they just roll over a cart with gold in it, you know, and they would tell people that's your gold, and then they would roll it back into the Federal Reserve.
Yeah. Who knows? You know, that's why I like to own. Have your own, purchase your own gold, have it stored in a third party safe, get it out of the hands of banks, get all that stuff. Obviously, if you've got massive amounts of gold, enough to wheel out on a massive cart, you might, you definitely want a third party holding it. But I don't trust banks. I don't trust the government, and I think it's good to have an insurance policy of some real physical, silver rounds, gold rounds. And, little bars. I'm not a fan of coins by any means. I think you pay a premium for these coins that have some logos or, stamped on it and mock-up of coins. To me, all that stuff is pointless. You're paying a premium for gold. If everything ever does hit the fan and the financial system crumbles, if something is 1 ounce of silver, they're not going to say, well, it's less because you've got an eagle on your coin. They're going to say, that's an ounce of silver. I don't care if it's an eagle or a silver round. I'll take 1 ounce of silver for it. So many people spend a premium on these coins, massive premiums. And to me, it's out the door because when it comes down to it, gold and silver are measured by weight, not by a picture on them because somebody likes an eagle or a beaver or a Canada flag more than the other. So,
or a Bugs Bunny. A Bugs Bunny or a picture of the Enterprise.
Yeah. Oh, they got everything out there. It's amazing. And then they sell tons of this stuff. I see ads for it. All these crazy characters and ships and, they're like limited edition and they're sold out in a heartbeat and people are lined up to get them. It's, people get addicted, I think, to buying all these funky coins. But yeah, I think you could buy so much more if you didn't buy coins. You just bought physical weight of metals.
Anything else you wanted to add for today's show, Chris?
I don't really think so. Other than we talked about utilities last time we spoke, and utilities have had a huge run to the upside. They've gone more or less parabolic in the last 5 trading sessions, shooting straight up. I think there's a little bit more room to go. I think the XLU ETF trading at 51.70 right now has got potential to go all the way up to about 53. But usually what goes straight up typically comes straight back down for at least half of that move. So I think we're getting to a point here where I think there could be a good opportunity for an actual inverse or a short play on the utility sector ETF, potentially later this week or next week.
Chris, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.